Good to see you back for the second part of my conversation with Dr. Adel Elmessiry about this very exciting new space called decentralized finance. Enjoy the rest of the video.
Companies started minting their own tokens in what led to the initial coin offering. That's what we call ICOs, similar to the IPO, initial public offering. And the big use case for it was we will create a system, and that system will have a value down the road. And what we need for you to do is trust us, give us your Ethereum in exchange for these token, X token that I've just created, and I'll take the proceeds, I'll build the project, and then the value of the token will appreciate, and you've participated into those.
Coming back to stablecoins, I think the fundamental part here is that, yes, there are tokens or coins, but there's a collateral behind them. And there are quite a few, even central banks, that are looking at that space to have digital assets backed with their, be it fiat assets or even gold in the background.
So that's an amazing question. Thank you for bringing it up. So stable tokens, so out of that space, when we talk about fungible tokens that you could buy on an exchange, so most of them have a value. Every day it's changes, so it's not pegged to a certain currency. However, we needed to be able to transacting without going out to the fiat. So another thing in like usability. So if every time I had to transact, I would need to sell out into fiat and buy back into crypto, it would become a barrier, and there are fees to do all of the stuff. So people started coming up with stable tokens. Stable tokens are actually two major like different aspects or classifications of which. One that is backed to something and one that are algorithmically stable. The back to something are easy to explain. So things like USDC. USDC, you deposit $1 and you get $1 representation in return. And you know that there is actually an actual dollar sitting somewhere that you can get it. So there is no run on the bank. It's what we call fully collateralized. And some systems say this is too much. So we can't really basically put $1 trillion to transact on all that stuff. So they've created algorithmically stable tokens such as DAI. DAI is a token that is algorithmically stable via the interest on it. So what they do is if there is a big demand, they give you more interest. So you are minting more as a people and vice versa. So there is no actual dollars associated with it, but it's pegged to the dollar algorithmically.
Yes.
And I wanted to harp on that point because this difference that before blockchain, we could not do stuff like that. It was imaginary. What do you mean a stable representation of a currency without having the currency exists there? But we can do that via algorithm. It's a very successful project so far.
Yeah, DAI has been very, very successful. Yeah, true.
Yeah, and that led to kind of like once we opened up the space and people started to pioneer all of this stuff, an example of a stable token that is in the middle. So it's not fully collateralized, but it's also not algorithmic, is Tether, for example. Mm-hmm. So they give you an IOU note kind of thing, say like, hey, here is the representation of the dollar. We are good for it, but there hasn't been a full audit that would show you all of that stuff there. So then that showed a clear, concise example for how central banks can operate with all of that. So central bank in the USA, central bank in the EU, Sweden, the same thing, are also looking at how to do that. Interestingly enough, the Chinese central bank is far more advanced and it's adopting it far faster than everybody else. And they've rolled out their own central bank stable token already. And they came up with the wallet that you use. So a fun fact is on most of the phones, like I have a Samsung, on it you have a blockchain wallet. All Huawei phones are going to ship with a digital yuan wallet on it, already ready. What that means is that now everybody globally that uses a Chinese-made phone with a wallet would have a direct connection to the Chinese central bank. And now you can send money and transact on it. So it's stable via the central bank system. It's the fourth kind of like concept there.
Let me quickly interrupt the conversation to say thank you that you are here with me on the channel. If you do enjoy what I'm putting out, the in-depth kind of conversations, then why don't you subscribe and also hit the bell button so I can keep you informed with our newest releases. Thanks for that in advance, and let's get back to the conversation. That is amazing. It makes me just think, the People's Bank of China, getting rid of all the Chinese banks because there really is peer-to-peer, i.e., B2C, I would say, without any of these intermediaries. That's amazing.
The danger there is not only getting rid of the Chinese banks, but what happens to the rest of the banks.
Yeah, sure.
So one interesting example is people that are transacting in, say, the middle of Nigeria in Central Africa. They are transacting via some local currency that if they wanted to buy something from their supplier in Germany that actually was produced in China, they'll have to go through all of those different conversions to get to their supplier, the manufacturer in China. However, with this new Chinese central currency, they will be transacting from their phone or through peer-to-peer, but they are paying the entire supplier back there immediately. So we need to think, otherwise, if we don't evolve, we will go extinct, right?
Yeah, no, absolutely. And WeChat is just such an example of it, how far the Chinese really are, because WeChat is not just WeChat. It really is, you do your marketing on it, you do your sales on it, you do your payments on it, you control your bills on it. It's unbelievable what, the Chinese are really using WeChat for, and not only the Chinese. So, I have the app as well. I don't use it for anything but chatting, very primitively. But I think that was very much the segue into them being very advanced. Talking about applications, Adel, and you mentioned it in the realm of DAI earlier on, the algorithmic stablecoin. And applications in terms of lending. We do have Compound, and Compound is also a protocol which actually allows you a financial instrument on your digital assets, i.e. compounding interest on whatever you hold, which leads me very much into a very interesting application that you are, with all your heart and soul, really pushing. And that is using DeFi, the entire technology, to look after the unbanked people in the world. Unbanked or underbanked, according to the World Bank, there are still about 1.7 billion people unbanked, meaning they don't have a bank account whatsoever. And we'll talk about the reasons as well. And you're trying to solve that problem for the people that fall through the cracks, and not only in places like China, India, Bangladesh, or emerging countries, but also the United States, where you are.
Yes, so that's a great point. Thank you for bringing it up. And it has been the bane of my existence right now. And the reason for that is that usually the people adopting any technology, they focus on the use case for those that have access to either assets or the technology and all that stuff. But what drew me into blockchain to begin with is the ability to go like mainstream. So in the US, for example, according to the Federal Reserve in 2018, there were 55 million Americans that are underbanked or not banked. So that's about 1/5 of the country that don't have access to that. So people thinking that this is a problem that only exists in developing countries don't really get to see the full picture. If you look at Europe, the same thing there. And the migration problem is not making it any better for us now. So if you had collateral, you would be able of going and borrowing from first a bank if you had like access to a job and so forth. If you don't have a job or anything like that, then you cannot get a loan from the bank. And then hence you are forced to go to shark loans and go into this cycle of living off of your credit card, paying exorbitant amount of interest on what you are trying to do. So that led me to think around like, why can't we help the masses, all those people, make their lives better? And what do we have in common? We all might not have assets, but we do have friends that do have assets. So what normally happens in life is if you are falling down in your luck, you go and ask your friends to help you. So they come together, they pitch in and help you. So I was thinking the next level of DeFi, after replicating the banking instruments and financial monetary systems on blockchain, why can't it be similar to that? Why can't we move that into the system? And that made me think, like, in the current paradigm, we look at the lending process as a borrower and the lender, the liquidity provider, that as a binary system. That's why the liquidity provider needs to hold some asset from you. What if we can untangle the risk from your loan from the actual loan that you are taking? That's where your backers come into place. So your friends come in, you say, I need to get to fix my car, or I need a new car. And they say, okay, we will back Adel and we will put the money that is needed for that. In the back end, the network will take those assets, will allow a liquidity provider to give me the money so I can pay for things and work through that. However, there is more. So the more here is the ability for the network to take that assets and invest them on behalf of everybody in the system. Hence, while the liquidity provider is providing me the money, they are getting the ROI on the money that they've put in. And while my friends are putting up the risk by putting their assets on, they are getting also an ROI rewarding me. So both wins. It's not going to be like a huge return.
Win. It's a win-win-win.
Yes,
you know, the borrower, the liquidity provider, and the backer, because that would have been my next question. I'm like, okay, you call that social staking, I think that's it.
Yes.
When you describe it. And I just thought, okay, so what's the incentive here? I mean, I love you. Of course, I help you. But would I necessarily back you all the way with my money? It doesn't matter if it's distributed between me and 10 other of your friends. You know, will I ever see it? And if yes, will I get anything for it apart from your thanks?
Yes, and that's what the power of blockchain is. I am using the same mechanism in smart contracts, in the binding settlements and so forth, but this time to be able of giving the borrower an interest-free loan, because what they are getting is, I'm getting the money, I'm not paying any interest, I don't have the collateral, there are no fees on that, except if you want to convert it to something else that's on you. And my friends that back me, that do good, actually are getting rewarded for that. And the liquidity provider are getting the same deal or even better than parking it in the bank or parking it in a bond. You know why the US bonds, treasury bonds are kind of like used all over the globe? Although it gives like very, very small amount of interest back. It's because it's stable and there is 99.9% chance that it will be paid on in there. So the similar thing, those bonds have untangled the risk from the actual liquidity via the governance and jurisdiction. Yeah. I am doing the same thing on the blockchain. I'm untangling it. So then as a liquidity provider, you park your money here, you get rewarded for doing that. The backer, if they back somebody, their friends, then they get rewarded for that, and their friends can get out of that poverty cycle or the issue that they are in very easily.
And what is the reward? I mean, if I get the money from my friends or from the liquidity provider, my friends back it, and I buy a car with that. Now that is something, you buy a new car, you ignite it, 25% of its value is gone. So where's the reward generated that I then distribute?
So the reward is in the system. What we've done is we've taken the assets from your friends and committed them to the network while giving you the fiat from the liquidity provider. So the money for the car is paid for from the liquidity provider. The assets are still in the system. Those assets are then utilized through DeFi to generate a better yield. And there are examples there that pay very good return. So I'm taking those, I'm backing into the back-end protocols there, like for example, DMM, it's a decentralized money market giving you a really good return. And we can generate the returns from there, then we split it three ways. One goes to the liquidity provider, one goes for the backers, and one goes for the network for operating all of that stuff.
Yeah.
And pays for the fees for like the borrower, so they get fee free.
Yeah. And just picking up on the point you said earlier about the unbanked or the underbanked, I looked into that space, and there are very interesting studies coming through, and the World Bank has a huge target to get it down, and microfinancing is something that seems to be helping there too. And the reason why a lot of people can't get, as you were saying, a bank account is because they might not have a stable life, job, or situation. Some of them, it's just the fees are too high, or a trust issue as well, or logistically speaking, they're just somewhere, out in the boonies, and there is just no bank. Microfinancing, though, I think that was an interesting one, because if you think about the transactional possibilities with digital assets, you have a penny, you don't have a 0.00001 penny necessarily that you can transact in our CeFi system. But the DeFi possibilities, they give that kind of option.
Yes, so that's a very interesting point there, and you have to look at the picture like I'm living in the future. So I'm living like few years from now and seeing where it is. So now you have all those central banks already apply the systems. So you are from your phone, you are digitally connected to like the Chinese bank, the EU bank, the US central bank. All of those are there. So that's one piece. So you don't have to like go hop all of that stuff, and you don't have to pay all of those fees there. So if I wanted to help my friend, say in Egypt, I would need to wire them the money. They need to have a bank account. They are paying, I don't know, $10 a month for maintenance on that bank account. If they need $100, I'll pay $45 regardless to send them that $100. So now it's already down to 55 minus $10. Now it's 45 over there. And if they want to convert it into Egyptian pound, then it's even less to begin with. And like you said, you cannot really split it. But in blockchain, you can go to like 10 to the power of 18 decimal points in it. So you can make it very, very, very small and tiny. And those tiny fractions help a lot in the network. If you can transact and smoothen the rails, so remove the fees, remove all of the stuff that allow you to work through those. So the advances in central banks, stable tokens, things like Tezos, for example, is another network that allows you cheaper transactions all over the globe. Are much easier there. You will be surprised to know that the global microfinance is about $150 billion per year, and there's 100 million people using it. 80% are women. Why? Because they are more responsible with their financial aspects there. And once you start in the path and build your financial reputation, people actually would give you a chance. So in Delin, that decentralized network that I'm building, once you start getting a small loan helped a friend of yours, then they get a better reputation. Then they can go to somebody that they know, but they are not so good as a friend. So like, hey, those are helping me. I've been good on my full commitments. Would you help me? Then moving from there into NGOs and kind of like UNICEF and IMF and other World Bank, kind of like you are trying to help the masses and the people. Instead of giving them a grant of money, back them, give them a grant, they live for a day, back them, teach them how they work through the finance, they can produce their own money and work through all of this stuff.
Absolutely. And I think a couple of fundamental points you made is you are building your financial reputation. It's like basically you're getting a rating. And if you look at the statistics of repayment, in the microfinance sector is much higher than in the normal, taking out loans. So micro loans are being repaid a lot more often, and maybe because it's mostly taken out by women, but a lot of women, especially in India, they set up their own shop, their little marketplace or whatever, and also in Africa. But the repayment ratio is higher, so your rating as somebody that actually does have a good financial reputation or ethics is increasing. So with that, you can really grow. And I totally agree with you. You back somebody, show them the tools, give them the tools, and teach them. They will work forever. If you do it for them or you just, smother them up with some, subsidies, it is not working. You mentioned something else. Imagine we are in the future, and now we're getting to the end of our conversation. It is Thanksgiving, Adel. I don't know how to thank you to take this hour with me on Mentory TV. A couple of questions, and then I think you need to start, going into your turkey. I don't know what you have for your Thanksgiving lunch. But first of all, what are the key considerations you would tell anybody that is considering right now the future of our traditional financial system and also the decentralized financial system? What are the considerations we should all think about when looking at it with a critical but open eye?
So I would tell everyone that, what you got to lose. So just remove your apprehensions. If you always like thinking about it, you'll never move a step. So number one, go get a MetaMask, a wallet or something like that. Dabble into those. You don't have to pay a ton of money to just learn about it, look through it, be part of the future of finance, understand what that exists there and how does it exist, especially if you are young. Because maybe if you are closer to retirement, you can don't want to risk any of those. But if you are young, there is absolutely nothing to lose there. Throw in your coffee money into that and see how it would work there. You might be surprised. Kind of like we are now back in the 91, 92, where the internet just coming through and people say hey, this is a fad, it will never work. But it did. So where are all those companies that are brick and mortar? They disappeared. So who's benefiting? That generation of the internet. So I was one of those. Now it's your time. It's your world. You're going to shape it yourself, learn about it, and participate. Blockchain is about community, about participating in it. If you go to dln.org, dln.org, you'll see that there is a call for people to jump in, register, work through that. Tell us what you think. Even the light paper for what I am building is online, open for anybody to come and comment on it and say hey, Dr. Adel, you're crazy. Fine, great. Voice yourself. Say what you are trying to do. Join the movement. Don't just sit there and complain. Don't curse the darkness. Light a candle. Come and join us. Participate.
I love that. I love that. Absolutely. And in terms of major trends, we are ending 2020. It's been really a crisis year, creating such a momentum in DeFi. Tell us about the future. How do you see 2020 plus 2021 and going forward? What is the major trend you're seeing? Where are the applications moving?
So first thing that you're going to read about and hear about the things like grayscale will become more prevalent. So institutional adoption of Bitcoin and Ethereum and then blockchain technology will start to pop up all over the place. Central banks going to start to implement all. So if Chinese have done it, you're going to see the EU, the US doing it as well in the next 2 years there, because there is no other option for doing that. Once you start doing that, you'll see this steepness, kind of remember the ads when you say hey, nobody was talking about AI. Now everybody's talking about how we are using AI in all our systems. You're going to see that happening as blockchain. And then you're going to see an increase in those assets, like for the Bitcoin and Ethereum, to reflect the importance and the use of those tokens. You'll see a lot of the smaller things that did not benefit people disappear and go out from there. And DeFi in general will become a normal place where you can finance your car, finance your mortgage, get something like mortgage application in 10 minutes flat. You just go create all the stuff, use it, and go with it. But what I'm really, really excited about is not what I can see, is what you can do. So people will come up with new applications. Before you could not do it, now you can. One application that was interesting is something called flash loans, where people would take a loan for simply 1 minute, execute on something and return it back. Similarly, think about students helping each other, businesses utilizing DeFi to set up the business and distribute equity through all of those. Those things that we're going to use will be amazing. And one point in the future, maybe in the next 5 years, you'll not even talk about blockchain at all. That would be the success. Not because it went away, it's because it becomes every day. And people just say, what about blockchain? Nobody talks about TCP/IP. I studied that in college. So, but it's the fundamentals.
No, absolutely. I'm so with you. Absolutely. It will become a commodity. It's on the best way because, it is faster, it is cheaper. Yes, it does have, of course, as a nascent technology, its bugs, and automation may scare a lot of people. Of course, things can go wrong. But I think that the traditional financial system really needs to, pull up the panties and look at this and not ignore it, not be complacent or even arrogant, because this is more than a movement. There is real money, real people, real application, and real goodness, like in your own wonderful initiative with AlphaFin to try to sort out long-standing global problems. Adel, vielen, vielen Dank. Sie waren ganz wunderbar. You were absolutely great. Thanks for joining me, your insights, and I wish you the most amazing Thanksgiving with your family today.
Thank you very much, and my regards to all the viewers.
And thank you, dear Mentory TV community, for having joined us yet again for a super exciting conversation, this time with Dr. Adel Elmessiry on, decentralized finance and what the future may hold. See you soon. Bye.